Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, March the 19th. I'm Eric Wilkinson, and you very well may recognize me from mainstream media as the Wolfman, where I've talked about everything from economic to geopolitical and market analysis. I do those same things in these daily market commentaries, but I layer on top of it a little bit more about options trading. It's trades that I actually am implementing into my portfolio, and I try to teach you guys the right way to implement options into your own portfolios. No, I'm not trying to give you guys investment advice. I'm not trying to tell you guys what is a good stock to buy or a directional assumption I think you guys should take advantage of necessarily. I just talk about my own trades, the way I'm seeing it, because you guys might have a better assumption of what's going on in the world right now than I do. So take that for what it's worth. But let's get on with the economic data. But for that, we got to say past performance of any trading system or methodology is not necessarily indicative of future results. All right, on with the economic data. And we got nothing really across the pond, so let's just talk about the United States here. We got Philly Fed Manufacturing Index coming in at negative 12.7, expected to be a positive 9.5. Remember, these are going to start showing up with these coronaviruses. Unemployment claims, 281,000 versus 220,000. Now, I don't really think the people were actually starting to get laid off and looking for more unemployment claims. I think it's just kind of the environment where people were starting to look for jobs, but it is a bit surprising that that number really started spiking well before this coronavirus thing started happening. I do think that we are going to start seeing those unemployment claims start to rise as people are going to be losing jobs if we continue to have this shutdown for an extended period of time. Then we also got natural gas storages. Excuse me, got a hair falling in my face. What just happened there? Natural gas storages. Where is it? Anyway, I guess I don't see it anymore. I thought we had natural gas. Oh, there it is. A drawdown of 9 billion cubic feet, expected to be a drawdown of 5 billion cubic feet. Remember, natural gas is going to start to rise as we see this crude oil really start to fall off. Yesterday, wanted to test the teens, if you will, coming down to $20.52. Some people are saying, I think that could be almost like 50 cent to 80 cent cut at the pump on your gasoline. So with nobody driving and the world really pumping out as much oil as they can, we could really continue to see these levels sustained. But we are having a move higher here in crude oil by about $3.50 as we speak. Gold futures pretty much unchanged on the day, right back to the point of control. We are below the 200-day simple moving average, which is a very bearish sign. So it has been a little bit odd seeing gold futures continue to slide as it's not really being a safe haven. But, the dollar is driving higher almost on a daily basis. So, some of that correlation is because this is a dollar denominated product. So is crude oil. So seeing that strength in the dollar being reflected in here. But gold is sold off a lot more than what we're seeing the dollar rally to compensate for that. So a lot of this could be where people are getting out of this precious metal and starting to look to allocate that towards some equities. We saw the NASDAQ really blasting off, was the leader to the upside earlier today as the rest of the equities were in negative territory. But gold is a little bit of a conundrum right here, coming off again today a little bit. All right, bonds are moving higher by almost 3 points right now. After yesterday, yesterday was a huge sell-off, back testing the value area high. As we get overextended up here to the upside, it is a little bit overdone. But, those 3.5% mortgages are probably out the window at this point for sure. But here we have the bonds up 3 points on the day. We are still elevated in the VIX. It is slightly off from the highs that we were seeing up into the 80s. We are down into the 70s, but this is still extremely high volatility on this VIX. Now, you can see normally when we look at this as this is on a 3-year chart, because I want to make sure everybody realizes how elevated this is. We do have a tendency to get a spike, once a year up into the 50s, and that's usually basically when we get those 10% corrections. Well, we've had about a 30% correction in just the Dow, so that's really caused VIX to spike higher. We're kind of holding on to these elevated levels, so there's still opportunity out there to collect nice premiums in just anywhere you are looking in the options market. So keep that in mind. We talk a lot about implied volatility percent. We're seeing some of those implied volatility percents really getting affected by this massive spike that is more of a black swan event, if you will. And we're going to have to talk about that going forward, how we take that into account and look at what's going on. All right, here we have the Dow Jones Industrial Average off by about 100 points. It is on a, what do we have this on? A daily chart here, I believe. No, it's on the 30-minute chart. So we're coming off the highs. We were looking at it being off by a couple hundred points, as you can see here. I think it was off almost close to 1,000 points earlier today. If we look at the low being 18,830, that is, a little bit better or close to being 1,000 points off the low to the high. So another 1,000 point range in the Dow Jones again today, coming off by about 100 points. But we can look at the NASDAQ. It is still in positive territory. It was up almost 100 points earlier today. I've got everything going into the 30-minute charts here because I'm looking at opportunities to sell some, sorry about that, looking to sell some call spreads in here. Again, I was talking about this. We sell the rip and buy the dip. Well, I had the NASDAQ, and I'm really irritated about this trade because it was great trade location. The market came up and tested that area of 74.50 that you can see here on the Fibonacci. I basically got in on this rally, and I sold in correlation to the NASDAQ, which we'll talk about here. I'll talk about that trade here in a second. And we've got the E-mini S&Ps off by about 12 points. So NASDAQ in positive territory, Dow and E-mini S&P still in negative territory and starting to lose some momentum. Now, I've been talking about selling this on the 50-day moving average, but I decided to wait and go for the 200-day moving average. So in my SPY trade, I'm unable on this. I tried to get the recommended third width of the spread in there and was unable on this in my accounts on selling those call spreads. But yesterday, let's talk about this. Yesterday, I got a little aggressive with this Delta Airlines trade. I've gotten basically synthetic long in this trade, was lowering cost basis on it by selling calls against it, kind of laid off on that and started selling some puts, if you remember. Actually, I sold some calls when we were up there. I sold the 60 calls, which with this volatility expanding during the life of this, it really hasn't decayed that much. And I originally sold those 60 calls for 52 cents. Right now, they're trading 22, so doing okay on them. It is lowering my cost basis. I'm going to let those expire. Probably worthless, but I did get a little aggressive and sold some extra calls just to take advantage of the high implied volatility in here. So the original calls are to cover that trade that I have as a synthetic long. This is just a trade that I put on, so a normal tranche, if you will, and went in there and sold the April 39 calls in there for, 96 cents in there. So sold some calls in there. That's was yesterday. You could sell them a lot better today. I think they're trading around $1.25 or something like that at this point. So you can get a better trade location than what I did. So, you can see I'm definitely not cherry picking trades, you guys. I tell you the winners and the losers, and when they're not working against or when they're not working for me, I'm taking advantage of this. Okay, I took a flyer on PENN, Barstool Sports. If you guys follow them on Twitter, Instagram, or whatever, they are really funny guys. And David Portnoy is the guy that does the pizza reviews. I don't know if you've seen those as well. Well, up in this area, I can't give you an exact date off the top of my head, but this is about when we started seeing the, oops, that's probably from a webinar there. I'm going to try and pull up my pen here and see if I can't get that to work. But basically what happened is PENN came in and bought 36% in Barstool Sports. I think it was close to 36%, and it was valuing Barstool Sports at like $400 million. David Portnoy basically was $100 million heir, had $100 million. Part of it was in cash and part of it was in stock, but this would have been that location to put on the collar, which I talked about in my webinar. So I talked about how Cuban did that around Yahoo. Well, David Portnoy probably should have done the same thing here, and it's done nothing but just take a free fall. Well, I went in there and bought PENN as a flyer because I couldn't sell puts below $5, and I bought some PENN stock at $4 and what was that? I think it was $4 and let's just call it 50 cents. I think it was just slightly lower than $4.50 there. So I got long some PENN stock. I put that in my IRA also, and it's just basically as a flyer on it being a penny stock and being able to see it move higher, because I don't think that they are going out of business. They should at least come back to the point of control or something like that. So I'm expecting a bit of a bounce here, and I didn't put a lot of money into it, to be quite honest. I just did it really to take advantage of that big sell-off and all the bad things that's going on in and around the sports area. So those are a couple of trades I did yesterday. Today, this is the trade that really irritated me today. Why? Because it was great trade location. Like I mentioned, I caught it very near the high there, and I went in and sold the 190 calls in there, and then bought the 185, sold the 185 calls and then bought the 190 calls and collected $1.60 for that. So that basically fit my rules in here on that, where let's just say the March. So we did the March. I'm going to do the old school, which expire tomorrow, and I sold the 185 calls and bought the 195 calls, and I got a credit credit of $1.60 on that. So that's about 30, which equals about 33% the width of the strikes, right? That fits the rules. Well, what did I do? I went in and I put it in an order just in case, because I was going to go take a shower and make myself some breakfast here, and I put in a thing to buy for a debit of 80 cents. I think it was actually 81 cents is the number I put in there, just because it tried to get me to buy it back at 151 when I put in the order to buy it. It immediately started being a winner. I changed the price on this. I didn't like down click on it, but I put it in there and erased the one and put it up to 81 cents. And I hit confirm and send, walked away, heard it ding, and I bought it at 151. So I'm out. I'm out at 151, and after the commissions, that 9-cent thing is probably a wash. Anyway, not so happy about that, but I gave it a shot on. Yeah, now it's trading 90 cents. Anyway, so it is what it is. That stuff happens. I'm not really sure why that happened to me today, but it did, and that's what we got to live with right now. So anyway, those are the trades that I've done. Not all of them are happy-go-lucky, but anyway, that's all I can tell you is it happens to all of us. Sometimes that order gets put in. I don't know why I got routed that way, but so I did something wrong there. It's a winner though. No. Anyway, check out today's webinar. It is on the call diagonal, you guys. So we did the put diagonal. Those were really working out. Now, if you believe that we're going to get this recovery, like the market feels like it's consolidating here a little bit. I don't think that we're going to get a sharp spike back, Well, this is the opportunity to sell some calls and then buy those longer duration calls that when this maybe gets behind us, this coronavirus gets behind us and we flatten out that curve of the pandemic, well, then we can take advantage of the market recovering over the long term, because we're going to finance those long duration calls with selling some near duration calls. And I don't know that we're necessarily going to get out of this and have this massive V-shaped recovery right away. I was expecting that before, but I believe that the fear in the market and the fear in the retail investor is a little bit greater than what I originally was expecting. So we have that going on. And I think that's it. That's all I've got, you guys, for you. Other than check out that webinar. Also, we need to check out this here as well. This is our disclaimer. Make sure that you read over this and understand that there is risk in losing your money. We aren't trying to give you recommendations like I mentioned at the beginning of this webinar. I do not like the herd mentality. I am not a proponent of people going out there and giving you investment advice when they are not a financial advisor, or telling you, all right, this is what you should be doing at any given time. It's up to you guys to make those decisions, because you very well may have a better grasp on what's going on in the world than somebody else. All right, so make sure you take advantage of your own thoughts, but use my rules in and around these option strategies before you implement those according to your assumption. All right, that's all I got for you, other than if you can't take that, take it easy.